Hi there, welcome to Kneppy Invest, and welcome to another standalone question from a viewer. This particular one comes from yourfrienjamin, who is asking what defensive stocks are and why we might choose to use them. Okay, so when it comes to defensive stocks, I would say my definition is the traditional definition of a defensive stock, and that is a company that is non-cyclical. So before we have a look at non-cyclical companies, what about cyclical companies? So banks actually are cyclical. In fact, they're highly cyclical. If we go into a deep recession, they are going to be significantly impacted. Mining companies are definitely cyclical. You definitely will see the price of a commodity go up and down like waves. That is the definition of a cycle. So banks, mining companies, in fact, I believe most companies have a little bit of cyclicality about them. I don't think there's any company that is perfectly, absolutely non-cyclical or defensive. But let's define and see what are some of the defensive companies or the non-cyclical companies on the ASX. So we're talking about Woolworths, Coles, healthcare companies like CSL could be considered non-cyclical. So those are three big companies on the ASX. And what does it mean to be non-cyclical? Now, to really define this, we have to go back to economics and look at elastic and inelastic. So if you ever done economics, hopefully you do know what elastic and inelastic is. So focus on inelastic. And inelastic just means if you ramp up the price of something that is inelastic, the demand will still be there. The demand won't drop. And in fact, the absolutely perfect inelastic stuff in the world is air and water, because we can't literally live without those. So if someone was actually selling air as a product, they could ramp up the price to anything and we'll have to buy it because we can't live without it. And actually, the same thing could be said for water. And in my opinion, air and water are two absolute human rights, and it's obvious reasons for that. Now, as a broad thing, food is also non-cyclical, or inelastic. But within food itself, you're going to see, different food stuff is going to have different elasticity. So, for instance, chocolate is probably going to be more elastic than something like milk or bread. And milk and bread tend to be cheaper and more stable in price over time. So that's what is a defensive stock. It's a company that has the traits of being non-cyclical. Now, a really good thing, another good example of a non-cyclical company or one that has inelasticity is health care companies, particularly if they are selling a product that is needed for someone to live. And that is why some pharmaceutical companies can sell drugs for an absolutely exorbitant price, because people are willing to pay that particular price to either live or have a much better life. Okay, so that is what a defensive stock is. Why would we choose these defensive stocks? Now, I have always considered defensive stocks to be low growth companies. That's not absolutely true. You do see a little bit of growth in some companies, particularly healthcare. In fact, some of the best growth companies are healthcare companies. So that sort of thinking that I have had over time that equates defensive with non-growth is not absolutely right. So how and why might we choose defensive stocks? Well, just think of the economic cycle. So if you are moving into a recession and the stock market might be moving into a bear market, what sort of companies do you want to be owning in your portfolio if you have to own companies? And those would be those non-cyclical or defensive stocks. I actually do know some people out there, some experts believe you should always own defensive stocks in your portfolio. I actually don't believe that. I do have some defensive stocks in my portfolio. CSL is probably a good one. And the whole reason I own CSL is because I do consider that a high quality company. And I do think that company has the potential to grow quite significantly over the next few decades. So that is one of the best case uses of defensive stocks. When the market is in a downturn, bear market, maybe your portfolio could consist mostly of defensive stocks and you might do okay. You might do okay. You probably would beat the market Your portfolio might not go up, but you'll do okay compared to the market. So that's probably the best use case for defensive stocks. And that is probably what many experts would say as well. And why they would also say you should always own a bit of defensive stocks in your portfolio because you just don't know when the next bear market might come. And also, I would also think, and this may not be true, there's probably less volatility in defensive stocks. And I don't think that is absolutely true because when I think of Woolworths, we have seen the share price of Woolworths go up and down a fair bit over the past 8 or 9 years. So there may not be a lot of truth to that, but I've always thought of defensive stocks as having those companies or stocks having less volatility. Okay, so hopefully I've answered these questions, your friend Jamin, to your satisfaction. If not, leave another comment in this particular video telling me off or something like that. If you have another question you'd like me to answer, just leave that in this particular comment section and hopefully I'll get to answer it. Okay, that's it for this video. And don't forget, I'm not a financial advisor. However, I am an economist. Yes, I do have an economics degree, have an economics and a meteorology degree. I'm not a financial advisor. So if you do need financial advice, make sure you find someone who is qualified and can speak to your own financial needs. If you need an economist, I'm willing to talk to you. Anyway, that's it for this video. Have a good day. Bye.